So guys, this video is going to be very important, especially in your early stages of trading, because a lot of people misunderstand the time frames, right? So I'm going to be doing a top to bottom market analysis, exactly how I would do it on a day-to-day basis. We're going to be looking at the pair gold because it's the most traded pair on the markets and a lot of people are more familiar with it. So make sure to watch the video till the end because you're definitely going to learn something, especially if you're a new trader or even intermediate, because a lot of people still misunderstand using or basically finding a bias, especially on a higher time frame, and how can we utilize that to execute trades on, let's say, a lower time frame. A lot of you guys actually use, let's say, smaller time frames such as 1 minute, 5 minute, or even 15 minutes, but a lot of you misunderstand, let's say, using higher time frames and how you can find a bias. And what this can lead into basically is a higher risk to reward, in terms of if you find a nice scalp entry but you're looking at the bias of, let's say, a 4 hour or a 1 hour or even a daily move, you can capture this and, let's say, let your TP run and move your stop loss to break even. So if you like this video, guys, make sure to watch it till the end because this video is going to help you. So smash that like button, hit the subscribe button, and put in notifications so you don't miss the next educational video. All right, let's get to the charts. All right, so I feel like one of the most why people make mistakes mostly in the beginning is because they get too lazy. They get too comfortable about looking at, let's say, one time frame. You know, they always want to look at one time frame and they just don't want to look around. If you use one time frame and it works for you, that's perfectly fine. But a lot of people miss like certain moves that can, you know, add some confidence to their trading if they just looked at a different time frame, looking for where the candle could close, or what if we can look for, let's say, a wick. All right, so we always start on the monthly. Now, a lot of people don't like to look at the monthly because they say there's nothing much happening, because each obviously candle represents, let's say, 1 month, which again, 1 month is obviously can be a lot of data if you break it down to low time frame. So if we look at the monthly on gold, you can't really see much. There's not much data because at the end of the day, you know, we've just been moving bullish for pretty much every single month with slight pullbacks, but nothing too crazy. So this indicates that we don't have much data to take from this. But if you take this on, let's say, currencies, for example, you will start to see, let's say, something more, well, where this data a bit more printed. So we jump down to the weekly and we see if there's anything that we can find, right? And there's two things we can spot over here. We've got two candles, two wicks. It's pushed up here. And we got another wick that is down here, indicating that there was some liquidity grabbed within these levels, right? So if we have a look at this and we understand, okay, where did these candles go to? Now, again, obviously we know that this was the highest point in which gold reached, which was 5,600. Now, if you take a look at that, we understand that 5,600, why we rejected off that specific level was because 600 is obviously a psychological level, meaning that price is going to push up and before coming back down. All right, but we can see that why price pushed into this level, right? Because we can see over here that we have some sort of a small range that's been formed, but this is obviously on the weekly. So this is 1, 2, 3 weeks, and in the fourth week we had a candle that pushed out and closed above this resistance level, causing us to obviously push to this high. And then we came back down, and now we came back to this price point, which is around 5,038. But we understood why price pushed down in terms of this level. We understood slightly why price pushed up to this level, because there's a lot of factors that went on in, say, now the world, which obviously drove the price up on especially metals, because it's not only gold, it was silver as well that also went on, let's say, a generational run. And when we came back down here, obviously this was price just tapping in, finding liquidity, and then move back up and find its sort of balance on the chart again. But again, we can't really find much data on even on the weekly, because we need a few candles to print, and this will give us better executions, because we understand that any moment, like, price can be in the middle of a range, let's say on a lower time frame, and that's something we want to find out, right? So if we go down to the daily, we still see that price, okay, this was the bottom wick, so this day that was that bottom wick that came down and tapped into these levels, right? So we're going to keep this over here, understand that that was a resistance level before, and we understand that price came into there. So we didn't come all the way down, we just tapped into this range, didn't fill the whole range. If you want to classify this as your daily range, we didn't come down and tap all the way down at that level, right? So meaning that, you know, price can still come down to this level, but it's not needed right now. This was enough liquidity for us to continue to drive back up, right? Now we can see where we are on price. We can see that we closed above this candle, which is the red candle. We closed above this on a green candle, meaning that price is pushed up on the daily, which adds extra confidence onto our trading. and we can see that we're potentially forming a smaller range between this level. Now that's something we need to pay attention to. So we're just going to go ahead and close this, nothing too much on the daily that we can get any data off. So we go on the 4 hour and we start to see things a little bit more clearer now, right? So if I look at the 4 hour, it starts to look a little bit better because there's more candles being printed and there's more data, which is what we need, right? So we understand that that's just make it very simple. We understand that's the resistance zone. You can see that price once it hit this level before. This was on Wednesday the 4th of Feb. We're currently recording on the 10th of Feb. So this was, let's say, last week. You can see that price tapped into this level and then came down and rejected and then came back into that level. As you can see again, where the price tap into this level where we find the most volume and the most price being traded. Now we understand that, okay, which range are we currently in, right? If we want to take back, not too far. I don't like looking back too far. I like to just look back on what I can see because, sometimes there's different factors that can go involved, right? So you can have economic news, you can have, some Trump comes to speak, whatever the case is, but there can always be a reason if you go too far back, but there's always going to be key levels that we can find out. So now that we've found our range, what range are we currently in? Now, a lot of you will be thinking, hey Luke, but this is a big move, right? This range is a big move. And yes, that is true. That's a $270 move, which is, again, nothing too crazy that I haven't seen in the past 2 weeks or the past month in terms of trading gold, because gold has been moving, let's say $100, $200, sometimes even $250 in a single day. So nothing's too crazy or abnormal what's happening in the gold market. Like any sort of catalyst can push the gold price up or down in a very crazy way, right? Now we understand that, okay, so since we identified our range, now what I look for is simply, where are we in this move? Are we consolidating? Are we bullish? Are we bearish? What should we look for? Now we spotted something. So obviously this, no, excuse me. So obviously we noticed that this was our highest high, right? So it peaked, we came back down, and then we pushed back. Okay, sorry, that was the wrong arrow. And path tool. So we understand this was our highest high, and we came back down, pushed down aggressively, closed below there, and then had some move up there, and then we came back into our range. To understand, we established that this is our range on the 4 hour, came back and tapped that, refilled the range, came back here. Now, what's the most ideal situation for us to do? Do we think that the price is going to go up from here, or do we think that we're potentially going to come down? Now, there's two scenarios you can look at it, right? Because now we haven't closed above this high. We tapped above, we tapped above green candle wick. We haven't closed above this, we haven't closed above this, we haven't closed above this. So at any point, this can still reject. Now, my understanding of, ranges is that if we come tap back into here, we failed to close above, any sort of bullish candle would be fine, but we haven't closed above there. So at any moment, we can come back down and retap that level. Meaning that for some people, we could indicate that we could come back down even to further levels, right? And this is very possible in terms of gold. A lot of people just seen bullish, bullish, bullish. People want to tap $6,000. But in between that, there needs to be price structure, right? So if we're going to come up and tap above here before breaking to all-time highs again, potentially to come down, this could have been the bottom wick, that could have been the bottom wick, but at the moment we still have some sort of bullish structure. But at the end of the day, we've got to pay attention to how we're respecting on the previous levels, right? So now we spotted a nice range that we're going to trade in. So now we have, like, let's say our overall trading range that we want to stay into. Once we push above, let's say, once we push above this level, or we push below this level, that's when we can reassess and redraw the ranges and redraw where we want to go. But now that we broke it down to 1 hour, we can see something a little bit more clearer. Because why? Again, we have more data. So now that we have more data, we can actually see, okay, what is price currently doing? Now, if we look to the left, not too far to the left, but we understand, okay, we're actually in between a smaller range at the moment. So we're going to go ahead and just mark out what range we're in. You can see that we're basically in this level at the moment. So basically we're in a 1 hour range within a 4 hour range. Now, again, we could say that this is the range, but we know that this is a 4 hour range. So we're going to potentially just look for entries just within this level, right? If we can find a breakout, because again, this is still a big price. This is a big price point to figure out. It's like $81, which is still massive, especially when you take trades, let's say on the 1 minute or on the 5 minute, or even on the 15 minute. This could be still a good move for you to play. But again, it's important, guys, to understand, like if we find an entry here, right, this is what I always try to break it down and for people to understand, right? If we find an entry over, where's my tool here? If we find, let's say, a short position, right? So we understand, okay, cool, price is we're gonna wait for price to close below here, and then we're gonna put our stop loss above these highs over here, and that'll be good for us. And we run this all the way down. You can see that we can get a, let's say, a 1.69 risk reward on this trade, and even that will be still high. We can see our price breaks down. So even if our stop loss even becomes here, so we increase our risk reward to 2.3, that will still be okay, because this stop loss is still $88, which is still massive move, right? Gold has to do something crazy. So this is something that we can pay attention to, but we understand that this, if we had to break lower, where would the 4 hour go? Start to look at the higher time frames, stop, you need to stop looking at only the small narrative. If you look at the bigger narrative, you're missing out on potential profits. Like, you can let trades run. You can get another position, for example. And this is what I always look for, how to increase the risk to reward. I'm happy with a 1-to-1, 1-to-2, but it's not always fixated. If you can consistently trade a 1-to-1, you will be profitable. If you win more trades than lose, you'll be profitable if you can smash 1-to-1s all the time. But now we break it down onto the 15 minute. A lot of people use 5 minutes, a lot of people use 30 minutes as well, which is perfectly fine. But I'm going to use, let's say, the 15 minute, just because it's more frequently used. So now we look at the 15 minute and we start to understand, okay, cool, like where are we now? Now we understand that there's a bigger range. You can see this price. Look at this. Have a look at this box here. So if I just mark out this for you, to understand, okay, where exactly price is trading, I'd say that's a pretty good level. We can see we're still in this. Let me just make this blue so you guys can understand it a bit better. So we understand that, look here, price is still within this range. Yes, we have price here, we have action, price action here, we have price action here, but this is like, don't worry about that too much. Like, we understand that we're in this level, so we can take advantage of when price, let's say, for example, is pushing above, closes above here. Now we can understand that at least at the minimum we can maybe tap again into these highs, you see. So there's another range above this level, but obviously we need to have a closure above there, some sort of candles that form in terms of a certain pattern that we're looking for. We can also use trend lines, Fibonacci, whatever we want to use, but this is obviously important for us to target these levels. Now again, this doesn't mean that I'm necessarily only looking for buys. Now we're waiting for price to obviously push out above here. Now we have a look to the left, how's price performed in terms of this. You can see that price, you can see where we are at the moment. You can see how, we've previously come into this area and price has pretty much just been respecting. And even when we get up to there, price has just been consolidating. So now we understand that we're in a consolidation zone at the moment. Now, again, we could take a risk and say to ourselves, okay, if price pushes back above here, we could potentially take shorts, stop loss above there, and then run this down and refill this range, which will give us a nice 1-to-3 risk to reward. But we've got to understand that if price is going to push up, aggressively goes bullish, come back into this level, we can also understand that at any moment price can just retap this and go to all-time highs again. Now again, we're not always fixated. A lot of people are really fixated. They're too scared to take a short because they just understand at any moment we can go to all-time highs, and that didn't get in on the buy, for example. But if you trade in your strategy, you need to take buys, you need to take longs and shorts, depending on if you take those all the time. You can't just automatically just shift and say, I don't ever see a short position, because there's no way that's not true. There's no way that's true, right? Because you will always see a position. Yeah, it might be a bit more scarier taking let's say a short position, especially in a very bullish market, but the opportunity is going to open up for you, So that's something I would look for. And then, like, for example, if you want to look for, let's say, any sort of pattern, right? So if we're looking and we're saying, okay, we're bullish, right? And we try and find let's say a fib level. Now, a fib level we take from our swing low to our swing high. It's our fib trace, and take from the swing low to the swing high. So understand that, like, price can still retrace all the way up to that level, right? So we understand that, before, we tapped into 0.618 level, but, we didn't know where the potential swing high was before. So at any moment, price can still come back down, especially if we follow in a bullish market. Price can still come down all the way to these levels which again would make sense, right? If price comes down, taps into here before grabbing liquidity, before shooting back up. Now that could happen, you know, even tapping into our 0.618 would be even more perfect, but 0.5 is still okay. So that's if you want to obviously take a Fibonacci retracement tool. If you want to be more patient and let's say wait for potential swing trade, that'll be fine, you know. So if we take, let's say, a swing trade, let me just show you how that would play out. And this would pretty much just align with an overall, like let's say we get the perfect 0.618 level, and we target, let's say, where our negative 618 is all the way above. That's how we got actually above this. And then this would be, your stop loss would be low here. So this will be a 3-2 risk reward, but again, it's going to take very long to play out, especially, again, I say that now, but at any moment, this could take 10 minutes. It's going to take 1 hour to play. Like we've seen some crazy moves. Obviously, again, this would be a massive move, almost like a $500 move. So again, like could take days to play out, but could take a couple hours. You know, we've seen some crazy things in the market. So just always stop looking at, you know, the most important thing is stop looking at, stop being scared to take a position because, you know, you think price is going to do a certain thing. Stop thinking, you know, start doing, start practicing what you're good at, and start practicing. If you have a solid strategy that already works, be confident in your setups. You know, yes, okay, we won't win every single time, but as long as we win more than we lose, and our risk reward is obviously covering that, you'll be profitable. All right. So that's something that I'll pay attention to. That's something like more of a swing trade idea. Now, obviously we can break it down. Let's say a 5-minute chart, and then we can start looking for more. Oh, my marks went off there. But obviously we can look at, like, let's say right now we can see that price is looking bullish on, oh, you see we've got like a lot of drawings here, but we can see that price has pushed down, come back up. And now again, we're forming some sort of bullish structure, right? So, I mean, if we take, let's say our previous swing low, like if we take, let's say our 5-minute swing low, we can maybe take it even from here, I'd say. Let's take it from here, for example. Swing low, like let's say there, to our swing high. Let's see over here. It's gonna go negative, yeah. But yeah, like for example, you can see that price came up and has already retested into, this is what I talked about, the 0.5 level, and it's the 0.618 level. So again, you could also look at like where we are on current price structure. Sorry, the 0.618, you can see it's quite dull, but let me just remove this quickly. So you can see what price actually did. So we pushed up, all the way up, came all the way to this level, came down, tapped into the 0.618 level. Now look here, if you had to take this position based on tapping perfectly at the 0.618 level, and then let's say you retargeted the highs at the minimum, your stop loss below here, so we have 1.61. So let's say, for example, you took this entry, obviously not breaking below there, you would have been safe, you know, because obviously we came down before. So let's say you took it exactly on this point. As soon as we came down to there, you still would have been good, and ideally you would have taken another entry, especially if price started to reject. This is what I would have personally done. I would take 50%. I'm just spitballing exactly where 50% would be. It's more or less there. And then we would do that, and then this would be your 1 to 4 risk to reward. So overall, the current structure is still bullish. But remember, like when we looked at, let's say the 15-minute, we were looking for some sort of Fibonacci retracement. We were obviously looking down, and we were saying, yes, price can still come down, but this could be the top wick that we need for us to come back down. But again, you see how we were waiting for longs, but again, we can also wait for shorts if price starts to reject, right? So there's two ways you could have looked at this. And this is pretty much how I would look for positions. This is more of like a basic understanding. There's a lot more key factors, which I'll go through in future videos. But this is like, you know, if you can master these, finding ranges, finding certain fib levels, and understanding what to wait for in terms of price action. And, you know, looking at the bigger picture, not looking too far left, but looking at the bigger picture, let's say on higher time frames, this will allow you to execute and get better risk rewards, which in essence will make you more profitable. So guys, thanks again for watching. If you enjoyed this video, make sure to hit the like button, smash the subscribe button, and put in your notifications so you do not miss the next video.